financial advice. I'm recording my thoughts about Nvidia stock. Nvidia stock is up about 10% after they have announced their Q4 2022 results. Even though they beat the consensus estimates, the revenue was down compared to previous year quarter 4. The operating expenses increased and the net income has decreased. So yet the stock is up about 10% because of certain statements by their CEO about AI's growth in the next few years. So in this video, I'm going to do a little bit deeper dive into Nvidia's financials and their business model at a broad level. And then I will do a stock price evaluation for 2027 to show you what you are paying for when you pay $225 for the stock today. Before we go too deep into Nvidia's financials, let's look at how Nvidia makes money. Broadly, they have about 4 revenue segments. First one is data center, second one is gaming, third one is professional visualization, and fourth one is automotive and embedded. When you look into their revenue for professional visualization and automotive and embedded combined, that represents less than 10% of their total revenue. So the main revenue segments are actually the data center and the gaming business. And when you look into the gaming business, it also includes crypto mining. And since we know Ethereum has moved to proof of stake, there is not much demand with the Ethereum miners. And gaming, as we know, is significantly lower in demand when compared to the pandemic level. So the data center business is actually making up for the weakness in the gaming and crypto. Overall message is that data center business is their main business that contributes to about 60% of their revenue, and gaming contributes to about 30% of the revenue. But as I said before, gaming isn't growing as much. Let's now move on to the numbers. First, we will look at Q4 2023 results, which actually resulted in its stock price going up by 10%, right? So if you look into my screen, the revenue is about $6 billion. And for the same quarter in financial year of 2022, they made $7.6 billion. So that's a deceleration of 21% year on year for this company. The gross margin is at 63%, so we have to give credit to Nvidia that they are maintaining their gross margins even though the revenue has decelerated. And when you look into the operating expenses are $2.5 billion this quarter, and the same quarter a year ago, where they made $7.6 billion of revenue, the operating expense was only $2 billion. So in this particular quarter, the operating expenses increased by $500 million year on year, and the revenue reduced by about $1.6 billion year on year. So it's going in the wrong direction, right? And then let's look at the net income. Net income is only $1.4 billion. And the same net income in the quarter 4 of 2022 was about $3 billion. So the net profit margin is about 20% now. So that also reduced. So even though they beat the consensus estimate, these earnings are not so great when compared to the Q4 of 2022. Let's look at next year outlook. In Q1 of 2024, they are saying they can make about $6.5 billion and maintain their margin of 63 to 64%. Now let's look at a more important comparison, which is year on year. This is fiscal year comparison. So certain companies do not follow January to December. Some companies do a different calendar, but still it's a year on year comparison. If you look into the year on year comparison, Nvidia's revenue was flat. The entire year they didn't grow much. It went from 26.9 billion to 26.9 billion, right? So there's no growth. And like I said, the reasons are that the data center is actually growing very fast, but its growth is being offset by the weakness in the gaming and crypto sector. So gross margin has actually dropped to 56.9% in fiscal year 2023. And if you look into the operating expenses, they increased significantly. In fiscal year of 2023, it's about 11 billion, and then in fiscal year 2022, it was 7 billion. And the net income, as you see, also dropped significantly, 4.3 billion in fiscal year 2023 and 9.7 billion in fiscal year 2022. So overall, these are not so great results when you look into it at a higher level when you compare year on year. Now let's look at Nvidia stock price evaluation for 2027. Remember that currently it's trading at about $225 with a market cap of $550 billion. And recall that it only made a revenue of 26 billion. Revenue, not net profit, revenue of 26 billion. So when you divide 550 billion with 26, it has a price to sales of 20, which is extremely expensive. But let's see. Let's look at its evaluation in 2027. So in the past fiscal year, it did not grow, right? The revenue was flat, so that's essentially 0%. But for the next 4 years, let's assume that they can grow their revenue at about 20% because of this AI boom. That's going to result $65 billion of revenue in 2027. I'm assuming a net profit margin of 30%. Their current net profit margin is about 20%. But the year before, when there was boom of crypto gaming, people were ready to spend a lot of money on these GPUs to mine Ethereum, but that's not the case now. But still, I'm going to be very optimistic and say 30% margin for this company, with which the net income would be about $19.4 billion. Since Nvidia is the market leader, growing at 20% and net profit margin of 30%, I'm going to assign it a premium multiple of 30, with which this company would be worth about $582 billion in 2027. Currently, their number of shares is 2.477 billion, and I'm going to assume that there will be no dilution. Whatever stock-based compensation they offer, they're going to buy it back. So with a market cap of 582 billion and a number of outstanding shares of 2.477 billion, the stock price would be about $235 in 2027. But wait, currently it's already $225, right? So that's 4% or almost no gain in 5 years, even when you assume 20% growth year on year. And remember that this is a sector where you cannot grow 50-60%. Even if Nvidia has a lot of orders, they cannot supply because the supply is also constrained with the companies like Taiwan Semiconductors, we have companies like ASML, we have like Intel. So there is a lot going on in the semiconductor industry. They cannot just scale their manufacturing very quickly, right? So with all these optimistic assumptions, we're still coming to $235 or almost no gain in 5 years. So remember that when you buy this stock at $225, you are paying for a company that makes about $65 billion of revenue with a net profit margin of 30% and make $20 billion of net income, which is $20 billion of net profit. Currently, Nvidia is making $26 billion of revenue. When will it make $20 billion of net income and $65 billion of revenue? Because that's what you are paying for when you pay $225 for this stock. Overall, I think this stock is really expensive and there's a lot of growth already built into the current stock price, and I would buy this stock if it falls below $118 because that would at least let me think of a 2x in 5 years based on fundamentals. These are my thoughts about Nvidia today, and let me know your thoughts. If you are a buyer of Nvidia at this price, I want to know your assumptions. I'm really curious about your assumption of the estimated growth rate, estimated net income margin percentage, and then what kind of multiple are you assigning? And when you assign a growth rate, what is it based off of? Do you think the data center is going to deliver extremely high growth and then that's going to offset for the gaming? Or do you think gaming is going to come back and also grow at more than 20-25%? I'm really curious to know. Please let me know in the comments.